Hi, I'm Todd Rosenbluth, Head of Research at VettaFi, and thanks for joining us for another episode of ETF360. I'm happy to be joined by Sean O'Hara of Pacer ETFs, and we're going to be talking about the Pacer Lunt Large Cap Alternator ETF, ALTL. Sean, thanks for joining me.
Thanks, Todd, for having me. Really appreciate it.
My pleasure. So 2022 has been one of those interesting years where we've seen low risk and high beta strategies work for periods of time. Why do you think that's the case?
Well, I think, this has kind of been a funny year in the stock market. I mean, we're fighting against the headwinds of higher interest rates and inflation, and the Fed is doing their best to try to tamp down inflation. And I think we've sort of had some fits and starts here. I think April was one of those high beta months, and I think August perhaps was another one of those high beta months, mostly driven by the fact that people are starting to think that maybe the Fed will slow down or they'll taper a little bit, or maybe at some point they'll pivot. When we get news like that, I think the market tends to view that as a positive, and you see sort of these little rallies. And then we sort of always seem to be kind of crashing against the reality that inflation hasn't slowed and the Fed really isn't going to slow down until they get what they want done.
We talked about ALTL, which focuses on both risk on and risk off environments. Tell us more about that product.
ALTL is sort of a revolutionary approach to factor investing. Most factor investment strategies started as single factor only, and they've evolved over time. And what we do is sort of dynamic factor investing. We use relative strength to alternate between one type of factor and the other. And so what ALTL is doing is it's using two individual baskets that S&P publishes out of the S&P 500. They have a 100 stock high beta basket and a 100 stock low vol basket. And what ALTL does is every month it runs a relative strength screen on both of those baskets, and whichever one has the highest relative strength screen is the one that it owns. And it's important to do that because I think most people would agree that over time, a single factor will outperform the market if you give it enough time. But those single factors can rotate in and out of favor, and sometimes they can be out of favor for quite some time. For example, this year, ALTL's performance has been driven by the fact that for the most part, I think 7 out of the 10 months so far this year, it's been in low vol, which has been a real big help to the portfolio. So not out of the market, but in low volatility stocks. And 3 of those 10 months, it's been in high beta. And so that ability to switch from one to the other as the overall market changes, or the relative strength in the market changes, gives you an opportunity to produce what we think are going to be higher returns than the broad market. That's been the case since we launched ALTL. I think it's produced almost double the return of the S&P 500 the last 2 years, and it's because it has the ability to switch from one regime to the other based on current market conditions.
That ability is what's something I want to harp on for a moment. It doesn't necessarily change from low vol to high beta or back each month. It can stay with one of those approaches if it's working.
Yeah, that's correct. The relative strength screen is run. And if we're in, for example, low volatility, and low volatility remains the better of the two choices on a relative strength basis, we'll stay in low volatility until that end of month screen indicates that we should be in high beta. Interestingly enough, over the life of this product, at least as long as we've had it, which I think is about 2.5 years now, it's been about half the time in each one of those two factors. But it's producing obviously much higher returns than the broad market, and it's also producing higher returns than each of the individual factors by themselves. It's beating low volatility, and it's also beating high beta. So, the success of the product is going to ride on that monthly analysis on relative strength, and not necessarily needing to be perfect. In other words, you don't have to get every monthly score right, but if you get more of the monthly scores right than you get wrong, over time, we think that's where the excess return comes from out of this strategy.
And so how do you find advisors are using this as a core, as an alternative to a core? What's the approach most common?
Well, so I think there's two fairly simple approaches. One is if we meet somebody who's, let's say, a single factor investor, whether it's momentum or low volatility or any of the other individual factors, and they finally learn that there's an opportunity to invest in factors in a different way that is a little more dynamic, that doesn't keep them in that same place all the time, and then so therefore you have to sort of suffer through those periods of underperformance. So we're converting a lot of single factor ETF strategies into ALTL, and then one of the strategies that we use here at Pacer is we use sort of a 3-pack approach to the S&P 500. I mean, most people in their generic portfolios will own the S&P 500. And they probably should, as you know, Todd, because you can basically buy the S&P 500 almost for free. So you can get market returns for almost nothing today. And that's one of the advantages the ETF business is giving financial advisors and their clients. But there are other ways to own the S&P 500. So we're using it where we're putting a third of the money in, say, SPY or IVV. A third of the money will go into, say, ALTL, and that's your alpha driver. And then a third of the portfolio will go into PTLC, which is another Pacer product, which is just a different way to own the S&P 500 using a trend following mechanism that will take you out of the market in big bear market declines. So they're using it sort of tactically that way as a way in their core portfolios to try to drive some alpha.
Makes a lot of sense, Sean. Thanks for joining us and sharing more about ALTL. Hope everybody has a great day.
Thanks so much, Todd. Really appreciate it.